welcome to another episode right here on Dar and Rene. I know it's been a while since we actually got together to talk more about finance and money and investments. And for those of you new to the series, maybe Dar, you can tell them what Dar and Rene is all about.
Well, Dar and Rene series, we are all here to share with you all the important things happening in the financial market, investing, and everything you want to know about how to structure your portfolio, especially, well, we're talking about on a global market basis. And throw us all the questions, we shall answer you.
That's right, folks. It's all about, putting where your money is, and especially if you have questions about investments, well, Dar and Rene is your channel. And for this week's episode, or basically the start of our brand new episode, we'll be talking about something that has been a buzz in the market, the big word, VUCA.
VUCA.
Right? Yeah, exactly. We've heard a lot about it, and especially most recently with, the way banks have been having issues in the US, and I think most of you guys have probably heard about it, Credit Suisse as well. We're going to be talking a bit more about that. But right now, once again, VUCA, and what does VUCA mean? Well, my first question for my good friend, Mr. Dar, is lately I've come across the word called VUCA. It looks like a word that describes the current world of uncertainty and high risk. Exactly. Can you share with us what you know about VUCA?
Actually, VUCA is spelled as VUCA, right? Am I right?
That's right.
So V stands for volatility, U stands for uncertainty, C stands for complexity, and A stands for ambiguity.
Right, so really complicated words, and how does that relate to us in this day and age?
Well, of course, if we are just looking at financial markets alone, now you look at all the markets, right? It is very volatile, and one moment it is up, the next day it is coming down very unexpectedly. And of course, U stands for the uncertainty. Whenever we talk about uncertainty, that means there is risk involved. Right. All right, complexity means market correlations. In many times in the past, we always based on market correlation to gauge the trend of this current instrument. But now a lot of instruments are beginning to decouple. All right, so it's hard to capture the trend. And of course, ambiguity means things are getting blurrer. On one moment you think it should be this way, but the outcome happens to be another way.
So, right. So, bro, I mean, with as you mentioned, these are basically things that are happening in the market. So, what advice would you have for people in this VUCA world?
Well, I think most importantly, know the market very well before you want to get into any market instruments. And once you jump in, risk management. Have a very good advisor or mentor to actually coach you how to control your risk, understand the nature of the market movement, the nature of the market elements, before you lose all your money or actually involve in any high risk. Okay,
so now let's jump to the next question. It looks like everything is trapped in the VUCA state right now, especially the financial markets, and it fits exactly in these four words which you just mentioned earlier. The recent downfall in Silvergate Bank, Silicon Valley Bank, Signature Bank, debacle in First Republic Bank, and of course most recently Credit Suisse have demonstrated the risk in financial markets, and possibly it might be another debt crisis in the making. What say you, Mr. Dar?
Well, two ways to answer your questions. Alright, number one, of course, we are talking about bank debacle, and the liquidity shortage actually erupted since last year. We have a series of 7 rate hikes in the US, the fund rate, which actually caused the bonds to fall, and many banks are actually running out of funds now when all the big high-level customers are doing withdrawal. That exactly is happening now that caused the crisis eruption. Alright, and the second thing we're talking about the Credit Suisse, right? So Credit Suisse, last night we saw the news that UBS is actually paying a 3 billion Swiss franc to buy over all the Credit Suisse entity. Alright, but not the debt.
Right. Okay, but bro, $3 billion. So that is that in layman's term, is that a steal, or is that or is that a market price, or what's your
questions? Okay, let me explain to you this way.
Okay.
All right. 10 years ago, we have seen the Credit Suisse share price trading at $70 per share, and now it is down to $1 or even lower. But when UBS actually put up an acquisition proposal at 3 billion Swiss franc, that actually quantified at 24 cents per share, which is dirt cheap, almost down to zero. So do you think it's expensive?
Well, I think for most people it'd be pretty low. But so in your advice, basically, is it a good time to go in and buy some Credit Suisse shares, or should I wait?
Well, I think it's cheap, but anything that is cheap can be even cheaper and down to zero.
Correct, yeah.
So don't get in first. Okay, wait and see, observe the market. I think probably until the second half of this year, we can have a clearer picture, and that's when you may want to go in and pick out the bottom, but not now.
Not now, right?
Not now.
Okay. So I guess, yeah, so as Dar mentioned, I think it's time to just hold off
Yep.
a bit and see what the policymakers and how the banks actually move about
Exactly.
and
Right.
decide what to do with the bank. Okay, now moving on to our next question. Can you tell us a bit more about the US debt ceiling and how it affects the world? I think that's a really interesting question.
Oh, that is a very important question. All right, US debt has actually reached 31.4 trillion US dollars. It's almost 100% of their yearly GDP, and this debt ceiling is going to be expiring in coming June. Okay, what does that mean? All right.
Right.
That means in this June, if US Federal Reserve and the policymakers do not raise the debt ceiling, they'll be in debt. They are not able to pay back all the bonds they have issued for the last 10 years. And the only way is they must increase or leave the debt ceiling. That's when they actually start printing money again.
Okay, but bro, so how does that really affect the US economy? I think, as you mentioned, they're actually getting in more currency and everything, but how does that overall impact the economy and most importantly, globally as well?
Okay, let's take a look at the inverted V. All right. For example, if you imagine the interest rate has been going up for last year, all right. As I mentioned earlier, a series of 7 rate hikes that actually pushed the market into inflation and spread over the world. And now at the very top, we are seeing that the market is melting down. Bond prices are coming down, and when this stagflation goes into crisis, all right, that's when the US policymaker need to cut rate again. And before they cut rate, they have to raise the debt ceiling. This is exactly the mechanism of the whole market.
Okay, cool. And to sum things up with the very last question I have, can you share with us or our audience basically how to be a winner in investing in this VUCA world?
Oh, this is a very tough question.
Yes, it is. I think
Rene,
it's an important one
you are
because
throwing a big stone at me.
yeah, but it's important, I think, because like as you mentioned, volatility, uncertainty, these are things which an investor is really worried about, and they want to know: is it a good time to go in? Should they wait? So what's your advice?
Remember earlier when I mentioned about the inverted V? Okay, let's talk about part one.
Okay.
When the interest rate is going up now.
Okay.
Nothing looks good in the market, okay, except putting money in the bank, turn into US dollars. You may earn two ways. Number one is the US dollar is appreciating against your local currency in most of the country now. And second thing is the US dollar interest rate keeps rising. All right, and I think it's a good deal now by not doing anything, put the money in the bank and you earn more interest than putting money in the stock market. All right, then after that, when we start seeing a market massive correction, which is sometime, which I believe is going to be second half of this year, that's when the US policymaker will start to cut interest rate, cut a series of rate cut, and that's when you start to buy gold and buy stock market, and everything will start to fly. So the action is the same, but you got to time exactly at which part of the economy that you're going to do certain actions in order to maximize your profit.
Right, so it's all about strategies and
timing
and timing. Okay,
Yep.
well, I guess that's as much time as we have here on Dar and Rene. So don't forget to catch us on our next episode as we'll be diving into more topics. Until I guess we catch you again, it's me, Rene,
And
signing off.
signing off.